We've talked a lot in the last segment about programs that are expiring. One program that doesn't exist that everyone has called for is additional stimulus. The HEROES Act was passed by House Democrats, I think, back in May. Obviously, that's gone nowhere with respect to the Senate. The CARES Act expired at the end of July. And Brian Sozzi, some interesting data coming out from a new Yahoo Finance Harris poll study showing what people would actually do with the money. And I say interesting, however, consumer behavior sort of suggests that that stimulus money didn't exactly go back into the economy. It shored up the perpetually underfunded household balance sheet.
Right on, Myles. And we asked a very simple question in this poll. If you got handed a stimulus check today, what in the world would you do with it? And I think the big takeaway is here, they wouldn't be going necessarily to Gap, Target, or Walmart this holiday season and buying 25 extra toys. But look, here's the data on this. 53% of those surveyed would take the money and pay down bills. 43% would pay for necessities, 39% would try to rebuild their savings, and 30% will put the money towards paying their rent or mortgage. So, Myles, Julie, we've talked a bit about this at length the past 2 weeks. You're seeing Wall Street really come out here and boost up these GDP forecasts for starting in the middle of 2021. But the reality on the ground is right now, even the households across the country are struggling, in large part because of the COVID-19 pandemic. And if they do get a check from the Biden administration early next year, they're going to need it just to plug holes. So you may not see this rip-roaring growth that a lot of these folks on the street see.
And what's interesting about this too, Brian, is that you always get sort of the economist view of this versus the individual view of this, as we were talking about sort of the dichotomy between markets and the economy as well. On the one hand, it's a good thing if someone increases their savings and pays down their debt and potentially leaves them poised to come out of the pandemic and hopefully, if and when they have a job, in better situation. But for broader economic growth and GDP, to your point, it's not necessarily a good thing.
And from a stock market point too here, Julie, keep in mind, I would argue the reason why you're seeing the market rally to the extent it is, and you see Dow 30,000 really on bullish expectations for the post-vaccine world next year. And if the consumers are telling you, hey, we're struggling here, we can barely meet our bills, that's not a consumer that's going to go out and spend and really power the economy going forward.
Look, I remember talking to someone about this, I think it was a month or so ago, and they were asking about the stimulus checks and, is that a one-time thing? If we've learned anything from the spring, it's that people love getting free money from the government. It's that the markets don't necessarily penalize the federal government for issuing that. And you can help the economy in ways other than getting people to go to Walmart, right? I mean, we're very myopic perhaps here on, you got to spend it at a publicly traded retailer, otherwise it doesn't exist. But paying down that debt, shoring up your personal balance sheet, allowing you to have some more comfort, that's maybe a less measurable part of the GDP calculation, but I think a meaningful one. And certainly if you look at reimagining economics, right, over the next couple of decades, I think this is sort of where things are trending. Very interesting findings there, and we can find that story in Yahoo Finance coming up in just a couple of hours.